Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look in the gold market this time. So today, fundamental view, we have really interesting discussion on the factors that stand right now behind the gold market and the market reaction, recent statistics that we've got, and gross domestic product releases, you know. With the analysis of all this stuff, I mean, these fundamental events, some data that we have, market reaction, and opinions of the investors, analysis of the big transnational companies, leads us to conclusion that currently, actually, nobody dared to speak about the new rally about the 2000 area. So the most brave expectations currently on the market stands in the ability of the gold to return back to the 1950 19 even area to show the significant upward bounce, but not the starting of the new rally. That's the reality. So how investors right now look in the market. They expect the possible upward action, but they do not talk about the continuation of the long-term previous rally that we've got in the last year. This is first moment. Second, the combination of the factors that could trigger this rally is really, well, optimistic, I would say. So there are three major points stands on behind of this possible optimistic scenario. First of all, Biden's pact on the 1.9 trillion should be adopted and approved fast. Second, there should be no dilution in this amount of money, so Republicans should not diminish this amount, and they should be provided approximately with this value that has been announced. Then second, interest rates should stay and drop below 1% level, I mean 10-year levels. And finally, Fed should keep their dovish policy as long as possible, and should keep this policy. So all of these factors currently have the problems. First of all, by the investors' opinion, that the Biden's pact hardly will be approved until mid of the March. Second, Biden has significant resistance among the Republicans who prevent the adoption of the 1.9 trillions. It's really very high chances that the overall amount that will be provided will be lower than this sum. Finally, speaking about the Fed policy, they already said that it will be moderate policy, and if interest rates, as it will stand right now, above the 1%, and if they will continue to rise or stand approximately around this area, hardly Fed will just sit on the hands and see how interest rates continue rising. It's probably they will adopt the policy, tense the rhetoric at least. Maybe they will not provide some real hint on the rate change, but rhetoric become more strict probably, and this will make impact on the market. Taking it all together, it's really low chances that market will be able to show the big rally in the nearest time, at least until overall fundamental picture will remain the same. So besides with the analyzing of the thoughts of the investors, it seems that some investors start to suspect something. They make actually the same statements that we did 3-4 weeks ago when we're in the middle of the December. We said that we suggest that in the second half of the year there will be major break-even point for global economy, and overall policy, overall view sentiment in general will be reversed and 180 degrees. So they tell the same thing. So now we could see the same stuff from the Mizuho Securities, some other traders. So they also suspect something, that something is changing, and it seems that, well, close to the middle of the year, the situation could change drastically. Besides, if you'll take a look at the recent commitment of traders report, you could see massive run out of the gold. So positions have been dropped, overall positions on the gold market has been dropped more than for 2%, so this is a big drop for 1 week. It's approximately 35,000 contracts have been closed. It's a significant contraction of the positions. And what is especially interesting is that the spreading positions have been closed. So it seems that investors were waiting for something to unlock spreads, but currently, well, they was just closed. That's all. SPDR fund is also losing reserves, so it has lost approximately 10% of the reserves for the recent week. So it means that that interest in the gold market is contracting. Maybe this reason in the recent drop on the stock market, while investors close the positions and to get the liquidity, they have sold maybe some gold positions as well. Maybe this is the reason, but we have what we have. So taking it all together, currently, yes, we have the bullish grabber on the monthly chart, but this is very long-term chart, and any pattern there has a relation to fundamental background. So monthly target can't be achieved just technically. So usually the strong fundamental drivers stand behind the big patterns that we have on the monthly chart. And the grabber that we have is not an exception. It means that it could work. It could push market above the 1950, but it needs the catalyst. So, and this catalyst stands with the factors that we just described. Approving of the Biden spec, drop of the interest rates, that is two of the most important currently. If we will get something of that sort, market could move higher. But in the situation that we have currently, in the fundamental, and the technical picture, the chances on that stands relatively low. This is the reason why we, make mostly moderately bearish view on the market, and we think that the chances on the downside continuation currently looks a bit stronger. So what we have on the daily? On the daily, mostly the same picture on Friday, the exception only that we have two side-by-side grabbers, and Fridays also was the grabber. So market actually shows no power to proceed higher and to out of this consolidation. So it seems that it's already major levels already has been tested. Market trying to move higher, collapsed. Trying to move higher, collapsed. So it seems that significant some bearish pressure exists here that sell off any attempt to rally on the gold market. That makes us think that chances on the dropping here are really significant. At the same time, with this butterfly, you see that the right wing of the butterfly is a bit unnaturally low. Usually, market shows this type of the butterfly's natural shape. It means that although we have the grabbers, but theoretically, some chance exists that some market could show some upper direction maybe by some reasons. At the same time, any fluctuation below 1956 right here, it will be just a retracement. So it will not break and change overall context that we have. To shift context, market has to jump above 1956. This is the major condition. Any fluctuation in this area, it will be just a retracement. Whether the market will complete this ABCD, so even it will hit the XOP with this ABCD somewhere in this area, all the stuff will be retracement. So, but reality stands that we do not know exactly where market could turn down and whether market will form the bottom, the wing high or not. That's why, as we have the bearish context, we have to work with the patterns that we already have. So currently, this is the grabbers, and we should try to use it in the beginning of the next week. Here's how we could do this. First of all, on the 4 time frame chart, you could see that market stands to the resistance. So 18.979, 75. It also will be resistance if you build fib level from this low to this bottom. This will be 75 approximately. And on Friday, we've got minor wash and rinse of this top. Unfortunately, our butterfly has been erased. It was looking really nice. But anyway, forming this minor wash and rinse, market has collapsed, forming another grabber on the daily. On the hourly chart, in turn, we have this sell-off. And I think that we could use it as a kind of the brand butter sell lookalike pattern. Why it's lookalike? Because we have not enough candles. So Jordan Apple suggests that should be 8, minimal number of candles should be 8, but we have just 7. At the same time, the length of these candles are pretty nice. So overall sell-off was not bad, and I think that it could work as a brand bottom. For that purpose, we could consider 1855, 1853, 54 conference resistance as the first level where we could think about taking the short position. Of course, if we will get this type of action on Monday, we should not go short. And if we will get this action through this conference, we also should not go short at next level. So we need some gradual action. It should not be thrusting upward action. It should be kind of the ABCD maybe on lower time frame, or anyway, should be some relatively slow upward action. So if this will happen, then we could consider this level as a chance to go short. If everything goes well, we will get good position, as potentially we will be possessed for a possible downward continuation. If this setup will be erased, in this case we will have to sit on the hands, and once market will break the 1875 area and butterfly shape will start to change, we will have to watch for something else on the higher levels, approximately somewhere around 19 even maybe. So that's the general overall plan that we could consider. Because despite of the monthly grabber, as I said, to trigger it, market has to provide some big fundamental catalysis that we do not have currently. So that's our view on the gold market. Let's see what we'll get on the next week.